Hey guys, welcome to the weekly market wrap-up. I'm Hannah Bernard. U.S. stock markets were crippled by a technical breakdown on NASDAQ on Thursday that brought stock trading on the country's second largest exchange to a halt for more than 3 hours. Called a flash freeze, all stocks listed on the NASDAQ exchange had their trading activity ceased. The SEC is investigating, the president has been briefed, and NASDAQ officials have gone quiet, only adding to the frustration. All this was no help to a market already attempting to form a support base after falling nearly 2% overall last week. U.S. equity markets had a slight recovery on Thursday following last week's sharp decline, with the Dow Jones up 60 points and the benchmark S&P 500 gaining 0.75%. However, both indices are below key technical and psychological levels as investors speculate as to the future direction of the markets. The FOMC meeting minutes released on Wednesday added more uncertainty, which suggests that the Federal Reserve is mixed as to the timing of QE tapering and wanting to keep all options open. In the bond market, U.S. Treasury 10-year yield shot up to 2.88% on Monday, followed by a slight pullback before closing at 2.9% on Thursday. Despite a vocal contrarian segment, mainstream financial pundits are increasingly convinced that the Fed will cut back on its loose monetary policies, which portends a crash in the decades-long bond bull market. Now let's turn to currencies and see how they reacted differently to this week's fundamentals. The U.S. dollar index recovered sharply after hitting a low this week of 80.77, with current trading occurring well above the 81 level. If support can hold, this will be net positive in terms of technical bullishness. The dollar-yen pair moved up substantially from Tuesday's low after yen appreciation due in part to huge sell-offs in the Japanese stock market. Current levels now trading hands at 98.63. It's important to note while the overall Forex sector is in flux, the technical trend looks bullish for the pair. The euro-dollar pair moved to the downside after briefly touching the 134 level earlier this week. While the euro has jumped over 4% from July's bottom, recent trades have been extremely choppy and caution is advised for conservative traders. Now it's time for winners and losers and our picks for the week. The winner this week is GameStop, ticker symbol GME. Share prices jumped 9% after the video game retailer exceeded its earnings estimate and raised its guidance for the year in anticipation of new gaming consoles being introduced by Sony and Microsoft. The console wars between the two electronic giants coincide with the hugely popular software releases, including Activision's latest Call of Duty series. However, hardware and software sales have been in decline due to the emergence of online gaming, so the long-term picture is still cloudy. The loser for this week is Abercrombie & Fitch, ticker symbol ANF. This personally makes me very happy, as I do not agree with the CEO, Mike Jeffries' tactic to exclusively market to only thin, good-looking, cool kids. After a massive earnings miss, shares are down nearly 18% against the prior session. The sudden drop is indicative of changing consumer trends, especially in teen fashion, as tastes become more sophisticated. Watch for potential bounce in share price during the third and fourth quarter, as Abercrombie will now have to initiate aggressive sales incentive programs to address huge inventory hangovers. Well, those are our winners and losers for this week, but there are thousands of companies out there. So weigh in the comment section below, because I want to know who you thought rocked it and who sucked it this week. Finally, let's finish up with precious metals. Both gold and silver are forming support base after last week's huge jump in the spot market, with gold edging closer to $1,400 and silver reclaiming $23 after taking a slight dip earlier in the week. Finally, palladium closed above $750, recovering some of the week's earlier losses as cyclical names lost their luster. Still, the immediate term momentum is fairly positive and should continue to slowly move higher from here. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. I really hope you guys enjoy this weekend, but before you leave, please make sure to subscribe to our YouTube channel and find us on Facebook and Twitter. For VNN, I'm Hannah Bernard.